Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, April 5th, 2019. It's 1 o'clock p.m. as I'm starting this video, Eastern Time, and I wanted to do an update on gold, silver, the US dollar, and then go through some of the silver stocks, silver mining stocks, that is. Over time, over the years, not just recently, I get more requests to do updates on gold, GDX, mining stocks, silver, precious metal stocks as a whole than I do on any other security or asset class, maybe other than the broad market, and it's close there. So there's always a lot of interest in gold. And whether I'm actively trading the mining stocks or not, I like to do periodic updates because I know a lot out there, really focus on these or have a good part of their portfolio, whether they want to invest in them, trade them. So let's dive into the charts. I'll just start out by saying this. Look, if you're, I'm near-term neutral to slightly bullish on the miners and the metals. But I don't have anything, very timely here. There are some setups that may look interesting, especially when I get into the silver mining stocks. But I also see a dichotomy in the charts. I see some that look actually quite bearish, that have had big runs and just breaking support. Recently put in a divergent high, and then I have some that look bullish. So there's really a mixed bag, and I'm going to go through that. So the takeaway here is maybe some individual trading ideas, maybe updates on positions that you might already have, and kind of, if nothing else, just an overview of the metals. And just want to let you know that I'm still longer term bullish on gold and silver, and am looking for the next trade. We recently had a swing trade heading into last quarter, or fourth quarter I should say, of 2018, and then we took profits somewhere in here on gold and the mining stocks, whatever we had there. All right, so let's start out here since we're on this daily chart of gold. Remember, gold, at least in my opinion, you want to know where gold's going, you just have to figure out where the US dollar is going. I've done many videos in the past where I've overlaid long-term charts between the US dollar and gold prices, and the correlation is unmistakable. There are periods of brief disconnects, but they're brief. But again, you go back 10 years, 20 years or more, and you will see a almost perfect inverse correlation between the US dollar and gold. What that means is when the dollar goes down, gold goes up. And it's not a magic formula. Gold, at least the gold we're trading here in the US in this GLD ETF, they're priced in US dollars. So if all other things being equal, if the US dollar drops 20% in value, it's going to take more dollars to buy an ounce of gold. If the US dollar goes up 20% in value against other currencies, then it will take fewer dollars to buy the same ounce of gold. So again, it's not any magic formula. So therefore, I think, in my opinion, any analysis on gold and silver is incomplete without analysis on the dollar to confirm or refute what you're seeing on the charts of gold and silver. And then ultimately, the miners, again, charts that I've showed in the past, there is a positive correlation, no mistaking it. Gold mining stocks and silver mining stocks go up and down with the price of the metal, and essentially they're a leveraged play on the metals. So in other words, gold mining stocks will go up. If gold goes up X, the mining stocks will go up 2 times X, for example, and vice versa on the downside. So they're very driven by the price of gold. And again, there's always temporary disconnects. So don't get me wrong. If you see a mining stock that has been dropping while gold's going up, I'm talking the sector as a whole, and I'm talking long term. Unless there's some mining stocks that have questionable fundamentals and they may be headed to bankruptcy. So you got to exclude those basket of stocks that are below $1 a share down there. I'm talking about the established, the senior miners, for example. Okay, so with that being said, let's look at the charts, see what we have here. So most recently, we had a very well-defined uptrend channel, a price channel in gold, and this was pointed out at the time. We had negative divergence. There it is. We had divergence at the first high right here. We pushed on up, made a second consecutive divergent high. So we simply extended the negative divergences up to that point, and therefore the chart's technicals played out as they usually do. You can see the last time we had a divergent high on gold, let's point out, was back here, and that led to that drop. Here was a divergent high, so that was your first warning sign to book profits, tighten stops. And I even closed out the long-term trade. I don't know, maybe it was down here, forget where it was. But then the sell signal finally came on a break of the trend line, and that was that sharp move down. So there it is. So we had a correction. Is it over? Could be. Hard to say. We bounced right back to resistance, failed, and so you can see we put in, at least on the RSI here, a divergent low, not on the PPO. It'd be nicer to see it there. And I'd also like to see, it'd be ideal if gold could come on down here to this 120-ish support level right here, and do so while keeping that divergence intact there. We probably won't have the RSI divergence, but who knows? It depends how it gets there. You know, it can either come straight down quickly, or it can work its way down over time and get there, and maybe the PPO does something like this. And most importantly, remember, divergences are not an absolute must for a trend reversal or to go long. They're just simply an indication. They help to confirm a case for a trend reversal. So there it is. Gold is right now just below this 122.40-ish, 50-ish resistance level with a big gap above it, and trading above that 120-ish support. If 120 happens to go, 117.40 would be very solid support, and I would be very interested in going long if the charts confirm, if and when we get there. But keep in mind, we may not get there. So here's my long-term outlook. This is a 10-year weekly chart. Beautiful downtrend line. Here, let me show you what I see here. We have, if you forget about all the other lines, just focus on these blue lines here. You have a big symmetrical triangle pattern with a breakout and a back test, and we're still back testing. So ideally for gold, you want to see that back test hold, and then we come up here to that big, I think that's a very big level, 130. Talked about it in the past. Reactions going back to 2010 there. And a lot of reactions since, you can see along the way. Break above 130 would really open the door up for a major leg up in gold, and I don't see, I think that trend would easily go up here to about 150. So that'd be a nice move in gold. First things first, we have to see the short-term charts firm up, the daily charts, everything else. I'll highlight here, we have a pending bearish crossover on the PPO, especially a clean high-level crossover. Sometimes those pan out, but look, sometimes you get a little whipsaw signal. So these are things that we have to monitor. I put price before I put the indicators. In other words, a back test to this support level. The only problem with back tests is they can continue. We had a back test here, and we had one here. Who knows, maybe we get one here, and we never break below that trend line or back into the triangle. So that's the only thing about back tests. Just because you're back testing doesn't mean you cannot continue, even if the trend line support holds. And that can be when you have a downtrend line. Remember, downtrend lines are dynamic. What that means is every day price comes in at a lower and lower level. So the longer you back test, you're walking down lower. So there it is. Longer term, it's still intact right now because that's simply a breakout and a back test. And again, I don't see anything very clear on this chart that says, yeah, jump in here. But I did mention before, a few weeks back, after we broke down here, I told you this would be an ideal scale-in zone right here between 122.40 and 120. And so far we pop. We're really right about in the middle of that zone again. And I said, you know, if that happens to break, you could continue to scale down to, but not below 117.40. Again, so that's more for a longer term investor in gold. As far as swing trading, I like to get in, get out. I don't like to be caught in dead money trades, and that's why I'm not in gold right now or the miners, because they've been dead money trades moving sideways for a while, going nowhere. And you don't collect a dividend on gold like you do on a nice dividend paying blue chip stock. So gold had that nice lift early in the year, but look, silver is not far off. Silver is down comparable to, I'm going to jump back to gold for a second, comparable to that, here, my chart will respond, there it is, this level here, really, that 117.40 level. Not exactly the same, but you can look at silver, and what stands out to me is we had a very well-defined basing pattern here, right here. I'm going to draw that line, I'm going to put this here. This basing pattern there. We broke out. That was bullish. Unfortunately, well, not unfortunately, this is the technicals, and this is why I've been out of that. Two things happened there. We had negative divergence, very clean, unmistakable divergence right there, and we ran smack into downtrend line resistance. You can see the blue downtrend line. So if that doesn't tell you, okay, you're going to get a reaction, hard to say how much, but with negative divergence on the daily time frame, it tells you it's going to be more than just 1-2% pullback, and that's what happened. So silver finally went on to break the uptrend line right here. Let's change that color. There we go. So silver broke the uptrend line, and then as technical analysis usually plays out, it didn't just limp down. We had a strong move down. However, it's come down. This is a very significant support level. And I will say this without ambiguity. I think this is an objective long area for silver. Could base around for a while, but what we have is positive divergence. Made a slightly lower low there with higher highs on the PPO and RSI. And that on a scale 1 to 10, that's close to a 10 as far as support. So silver to me right now looks better than gold, at least from a risk reward perspective. There's no guarantee it plays out, but you go long here around around the 14 level with a stop somewhat below to allow for a little stop rate if they try to shake everybody out. And I'm talking from either a swing trade or a long-term trade. Swing trades, it could, like I said, it could be a dead money trade for a little while. But again, if you have patience, there's kind of a fine line between a swing trade and a trend trade, and it depends on your time horizon. Swing trades typically last a few weeks to a couple months. Trend trades, 6 months or more. But this could work out as both. And so there it is. So you go long there, stop not too far below. Here's your downtrend line. That would be your next buy signal, and that would be a big buy signal if we break this downtrend line. So we move up here and then break out above that downtrend line, because that goes back. Here, let me show you all the way back here to early 2017. So there's the bigger picture on silver. I'm using SLV, the silver ETF, as the proxy here. Now let's look at SIL, Silver Miner ETF, and that looks to me better than GDX right now. You had a downtrend line right here. I probably should have brought that back farther, because it certainly goes pretty well-defined downtrend line. Nice, clean, strong divergence at the lows right there, and breakout, back test 1, back test 2, and the trend is up right now. However, the trend's questionable because we broke that uptrend line and we're back testing it now. So that's again why I'm doing this video. I'm going to go through the charts of the silver miner stocks here in just a second. So that's what we'll do going forward, and I'm going to show you some that I really like. I think offer objective long entries, minimal downside, especially if you have a relatively tight stop. And I'm going to show you others that aren't so hot. So what that is I'm seeing a mixed bag of technicals in the charts. In other words, dichotomy between bullish and bearish charts, and therefore that's why I'm afraid we might get some kind of sideways grinding action right now. I think the downside's limited, but again, I don't like to be stuck in dead money trades. You can deploy that capital elsewhere. So let's dive into the charts and I'll show you what I'm talking about. Okay, unfortunately TC2000, this charting program that I'm using, does not have, it usually gives you a list of all the components of an ETF, and SIL is my preferred. It's the one I've traded forever. I think it's the more liquid of the two, but either way, SLP is another one. Doesn't matter because they're going to hold a similar basket of stocks. So I'm going to use SLP. This should be the holdings of SLP here. Why is it saying gold? Let me make sure. I'll make sure we have that in my watch list. And then we'll go through those components. Hold on one second. Okay, here it is. This is the components of SLVP. That's the iShares MSCI Global Silver Miners ETF. I sorted these by market cap. Just keep that in mind as we go through. If the video gets going too long towards the end, I'll cut it off. Why? Because the top weighted components are going to have the biggest influence on the sector. So, as we go down here, you start with WPM, which is Wheaton Precious Metals. Some of these, if you see the .to, by the way, guys, that's just the shares that trade on the TSX, the Toronto Stock Exchange, because these are big Canadian companies and there's probably more liquidity there. Most of these you can also buy in U.S. shares. The symbol may be the same, WPM, or may be different. So I'm just going to go through what's in this list. But keep that in mind. If you're trading in the U.S., you don't have to buy the Canadian shares. Nor do you want to, because of tax withholding and all that stuff they do, extra fees from your broker. All right, WPM.to, let's move this list to the side. So here's one, for example. What do I see? I see a pretty well-defined uptrend line. I see a stock that's very overbought, overstretched. Look at the RSI down here. Extremely overbought. Hasn't been that overbought in years. This goes back 2 years. And I see a simple wash, rinse, repeat scenario. I see a rising wedge with negative divergence below. This one broke down, back tested, and correction. Here's a clean wedge, breakdown, big correction. Here's a much larger wedge, and it broke down recently. It's just trying to hold that trend line now. Look at that. That red candle is just on there. Maybe it's a false breakdown. Maybe these divergences get burned through, but here's one. It's already run quite a bit. So this is one that I'd be more interested in either tightening stops or taking profits if I owned it now. It's up 68% since last November, and it could certainly correct if these charts play out. All right, so BVN, same story, big bearish rising wedge, just like this one. There was your top, there was a correction. Here it is again. We don't have a sell signal yet, but if we have negative divergence, and here's one that while there aren't any sell signals, and it's certainly in an uptrend, I just don't know how much more upside is left at this point in time, especially if you get a breakdown, you could have a correction. PAAS.TO, Pan American Silver on the TSX. Messy chart. I'm going to move on. There's just not a lot there that stands out to me. SSRM, uptrend line, big divergent high. You can see it here. I don't have all the charts marked up yet, but there's your negative divergence. Breakdown back test. So it doesn't get any cleaner than that. That was a nice, well-defined uptrend line, breakdown back test, and it's correcting. So, like I said, a mixed bag. So far, I'm showing you mostly bearish stocks. You get down to the bottom, some of the smaller ones, and they look a little better. This one had nice divergent low there, but again, the train left the station a while ago. It's in an uptrend. I certainly don't care. I don't see any reason to short this one. It had a small divergent high right here. And again, this is just the correction you've seen in the sector. So overall, the trend looks bullish right now, but there might be a little more downside in the near term and or sideways action. There's some support right around there coming into play on that stock. HL, Hecla Mining, nice. See, this one looks better. We don't yet exactly technically have divergence, close enough to it. Let me move this line up here. Let's just put it like this. Let's just say those are roughly equal lows on the stock with much higher lows on the indicators, divergence there. I don't have a very good trend line or anything to trigger a buy signal. So on this one, what you do, again, if you want exposure to the silver miners, this one hasn't participated. You also have to ask yourself, why? Why has this one been going down when almost everything else in the silver sector had a nice rally this year? Is there something there fundamentally wrong with this company? Maybe. Do your own due diligence. But I can tell you from a technical level, it's beat down. If it can hold up and something turns around with the company, you buy it here close to that 215-ish level with a stop somewhat below. If it starts to get some upside traction, here's what you watch. There's a long-term downtrend line. It goes back beyond this chart, actually to the all-time highs in the stock in 2016. Very well-defined downtrend line. So if this little sucker can break that just to get to the downtrend line, you're talking about 28 or so %. If it breaks that downtrend line, you're talking a lot more. That'd be a powerful buy signal on HL. SEA.TO, Seabridge Gold on the TSX, just pulled back to support and uptrend line support. So price support, there's a big gap right here. See the gap? A lot of reactions there, reactions there. That level is about $15 plus uptrend line support. I like to see that. I like when I have not one but two intersecting support levels. Doesn't guarantee the trade will play out, but what it does guarantee, it's an objective long with a stop not too far below. You know, we had a divergent high there, negative divergence, I should say, divergent high. Broke down, little false whipsaw signal, and then finally the real deal. But I can tell you this wedge has probably played out, or this pattern, to its measured target. So again, I don't see a lot of screaming buy signals. It was oversold, and it could take a while there, but like I said, the closer you can buy it to 15, then with a stop not too far below, gives you an attractive risk reward, especially if you're bullish longer term in the silver miners and you're looking for some stocks for your portfolio. Next one is LUG.TO, London Gold. Messy chart, not my favorite, so let's just move on. MAG.TO, Mag Silver. You can see I can't draw a real clean uptrend line, but you can see it's kind of stretched, no divergence. The stock is in an uptrend, and I don't see a lot on it, very bearish, but it does need to, on the weekly chart, there's a downtrend line. It needs to pop above that. PPO is starting to roll over. And it's pretty stretched, so this one may have to work off the overbought conditions. You can see it just became extremely overbought down here. But again, I don't see a lot in here that says the stock's going to correct much more than maybe down to this level or so, at least at this point in time, 1240. So not one of my favorites now, but not one that I think is going to go down a lot more. FVI.to, Fortuna Silver Mines, nice divergent low. Here's your positive divergence. Like to see that PPO curl up, divergence on the RSI, and a potential bottoming play. And keep in mind, as I do this video, it all comes back to the price of silver. I showed you silver at support. If silver starts to rally off that support level, a lot of these stocks will rally. Those that had the bearish divergences or just breaking trendline support, those may prove to be false breakdowns. They may continue to rally because they should move in line with silver prices. CDE, Core Mining, if I said that correctly, there's a divergent low right there. Positive divergence, and you can see support as well. It's a double bottom low. I should have a line right here, make that line brighter so you can see the value here. And 1, 2, 3, several reactions there around the 378 level. Same story. You buy it there. You might want to allow for a brief 1, 2, 3 day pop below. They try to run the stops, but that's only going to extend these divergences and keep them intact if it happens soon, that is. And this one, there's a few stops along the way, but I see it all the way back up here at about 586. So the closer you can buy it to 378, let's just go a little bit above there. And you run it back up here to 586, you're talking about a 50+% return on your money. If and when 586 goes, that would be very powerful and open the door easily for a move up here to 727. That's about a 90% return on your money. So this is one worth watching. I've traded this guy on and off over the years. When it runs, and all the silver stocks, the miners, when they run, they can really run. So this is one that the risk reward is very compelling. Again, if you're willing to give it a little room, they're volatile. You're not going to be successful running a 2-3% stop loss on these stocks. There's just too much back and forth gyration. Even if you're in the right trend, an uptrend, it's going to take you out on the day-to-day grind. So you have to use larger stops to account for the above average gain potential. And to make that, to do that without getting wiped out, just take your position size down small enough where a 10-12% stop isn't going to cause you to lose any more money than you'd lose on a regular trade with more capital in it. ELD.to, there's a nice trend line, nice divergent low, positive divergence breakout, and this one's going. This one seemed to bottom back here. There's a little divergence forming, but again, it's all about silver. And look, if it pulls back here to 540, that was a level, former resistance level. It should now act as support. And there's your next objective long entry. May or may not have that pullback, and it may or may not hold it. And that's where you put a stop a little above, because you don't want to hold out for a back test of this trend line. At this point, the stock is too far away. It would cause you a lot of pain to ride that one all the way down, and then there's no guarantee that a back test would be successful. So I think a stop somewhat below 540 would do the trick, and just let it ride. If it's a bottoming play, I don't even want to hand out targets, because if silver firms up and it's going up over the next year or two, this stock's going to probably be in the high teens to maybe the 20-something dollar range. DMP.to, Dundee Precious Metals, looks like a rising wedge, but it could continue to walk up this trend line. Sometimes, the wedge has plenty of room before apex, so steep divergences, and those divergences have already played out. So you had a divergent high at that point, and you had a correction. The million-dollar question is that correction over or not? There was your divergent high. There was a sharp correction, overshot it. That's a one day. Here's a good lesson why you don't want to jump the gun when trading on the daily time frame. Intraday breaks often prove to be whipsaw signals, so that's what that was there. And it's in an uptrend now. If it breaks that line, especially with a solid daily close, that's not good. Otherwise, it may want to work its way up, and it could take burn through these divergences. It all depends on what silver does. But so would I be stepping in here? Not my favorite. You could take a shot at support at the trend line with a stop a little bit below, maybe below those recent lows. But like I said, some of these stocks are looking a little toppy, and some look like they're bottoming. SVM.to, this one I can tell you, there's a couple nice levels that stand out. 315. If I would have done this video 2 days ago, we would have had a shot to, buy it at 315. It was a big lift yesterday. See that big green candle right off support? That tells me, that impulsive move tells me that buyers are watching that level. It's not just a random level. You can see a lot of reactions along that level in recent years. So it's certainly a level to watch. Objective to go long on pullbacks to that level, and not good if that level breaks. If you're long, you want to have a stop somewhat below it. And there's an alternative. There's a trend line that would probably come into play. So if it were to break that trend line soon, I would give it at least to this uptrend line for a stop, because it would probably be a little false breakdown there, flush out move, clear out some longs, suck in a few shorts, and then the stock could reverse. Trend indicator is positive as well, so I like this one. If it were to break 315 and grab it close to that trend line, I think that's a good one. And then, of course, a break above 370, that opens the door for a major leg up. MUX, McEwen Mining, ooh, nice, almost divergence. I call this an 8. Well, yeah, about equal lows on the PPO. Definitely positive divergence on the RSI. A few big green candles. Maybe it's bottoming. It's getting cheap. That's not always a good thing. Down it's about $1.50 a share. Let's see if the weekly tells me anything here. Let's see. It looks like we just cracked some potential. We had some support back here. It's not solid support. It's cracking below there, but you know what? There's big divergence on the weekly. So I'm liking this one. I'm warming up to this one here. And there's your downtrend line as well. So there's the pattern to watch. And again, you can see it on the daily chart. That downtrend line would come off here. Probably coming somewhere like that if I did that correctly. Or you can look back at that weekly chart. It needs to get back up above this level here as well. Let me add one more line. If it does reverse soon, there's going to be a little bit of resistance to overcome here. If it can do that, that's a good sign. That's even a bigger level, about 186. But again, potential bottoming play. You buy it, you put a stop not too far below, tuck it away. Your downside might be 10%, but your upside, even just to that downtrend line alone, is 51%. If that downtrend line gets taken out, you're talking hundreds of percent, several times on your money. So it's all about risk reward. PG.TO, Premier Gold. Let's see, I hadn't had this one marked up, but I can give you a trend line. Yes, I can. Here's your trend line to watch. Let's see, about uptrends, nothing really worth, and then we don't have enough reactions to make a valid uptrend line. So that's it. Trend line to watch. Target, if that trend line gets broken, right here. Great target, about 252. You want to swing for the fences, try to get ahead of it. If you think silver is going to bottom, that's about a 50% return from here. So just set your stops accordingly. EDR.TO, nothing much that stands out to me. GORO, Gold Resources, very nice level here. If you can buy it around 367, you can see a lot of reactions at that level with a stop somewhat below. It'd be nice if it undercut it too. You'd have you can see the divergence forming here. May or may not do that. It all depends on where silver goes, but a little more downside, and then a reversal would look something like this. Boom, boom, big divergent low. That one goes up to 504 from whether it undercuts 367 or not, and you're talking about 40% just to get there. So not a bad risk reward ratio there. Maya Gold, very thinly traded, and look at those choppy candles. Let's skip over that one. GPR.TO, Great Panther Silver. Traded this one in the past. It used to have a different ticker, or at least the US shares, so I'm sure they still do. I think it was GPL if I remember correctly. It's got a big level right here. You can see it on the volume price histogram, that whole shelf of support. It tried to pop it here, failed. So if it can get above that level with conviction, that would be pretty bullish, back above 145, 150 or so. Trend indicator is still bullish, by the way. And the thing is too, guys, remember, these got overbought, and nothing goes up forever. And you get very overbought like this, it needs to consolidate. This is healthy price action. What's not healthy is if something just keeps going up, up, up without overbought, because then they tend to crash. So you want an uptrend with corrections along the way, works off the overbought conditions, shakes out weak hands on the longs, gives you a more firm base holding the stock. Again, so I can't really see a solid buy point. I'll give you one if it gets all the way down there. Very good support here, about $1, and that's also a significant level, because stocks need to remain above $1. If they go below $1 for too long, they get delisted. So the company will do whatever they can to get their share price above $1 once it dips below like that. Maybe we'll stop here. No, I'll go through a few more. USA.to, America Silver Corp. There's a downtrend line. It's been popped twice, 2 false breakouts so far. Well, this one could be back testing, maybe not a false breakout. Or you can do the BOD trend line, pull it up here. Let's see how that fits. Somewhere along there. So this one's not perfectly well defined, but it's like this one looks like it wants to pop above there, and it does have some resistance not too far overhead, around 224, 274 that is. And if it can get above there, 342 would be the next target. EXN.to, I'm going to skip that one. I'm going to skip this one. No, I'll mention this one. Broke out above the downtrend line, back tested, ran up, hit this 36. See, we're getting down to low priced ones. Maybe I should stop here. Yeah, 30 minutes. Let's just stop, because now we're down to a $1 million company. When I crossed down below USA.to a minute ago, we dropped below the 100 million mark. Very speculative, so let's just focus on those ones that I already covered. And again, I'll do an update if anything significant changes, but the bottom line is silver looks to have more downside, less downside than gold here. Maybe at support, could rally from here, or may take a little time, but these are worth watching. And again, define your time horizon. If you're in it for a quick buck, you're an active swing trader, you want in and out, you may want to hold off till there's a few more green lights in this sector. Long-term trader, I give you some stocks you can start building positions, and or set stops on those that are looking a little toppy to kind of protect profits. And when the time is right, I will add some of these or the other mining stocks as official trade ideas. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.